this is Alina Araujo with Windermere, and I am with Dietrich today. He is with Guild Mortgage. He's an expert in so many areas and aspects of mortgage lending, and we're just chatting today about different topics that I thought would be very interesting for you guys. So I wanted to ask you, so right now I am working with a lot of people who are looking to downsize. Like, what are options for maybe people who are wanting to downsize into somewhere, something smaller, or even, relocating closer to families or whatnot?
Yeah.
You have some really good information for us.
Yeah, no, absolutely. Thanks for having me. I think when it comes to downsizing, there's a lot of strategy that can go into it that most people may not dive into enough to really look at all the options available. And it's really case by case on what the overall picture is from a financial standpoint, how much equity that they have, what they're looking to roll into, and what makes the most financial sense from looking at all of those pieces. So when I'm looking at client and having client conversations, it's having all of those questions coming out first so that we can really set up them for us, not just to purchase that next place, but to make sure that that's going to be a fit for their overall plan within their retirement plan. Oftentimes, if we take the time up front to do that, it really can set them up with a little more flexibility in their retirement. Okay. Instead of getting into something, making a quick decision on it, and then having to go back into the planning 5, 6, 7 years later and change something around when we could have addressed it up front with an overall strategy, whether it be a balance of mortgage and cash in order to buy that downsized property, whether or not it makes sense to pay cash based on their other portfolio and what they have to work with. And then at certain times, based on their overall situation, there could be a reverse mortgage option that could make sense for a purchase.
Can we talk about reverse mortgages? Because this is a very popular topic right now in the industry. So I would love for some information.
I mean, it's changed over the years. The product has had updates and things. It's a government-backed product. There's over 1 million people that have reverse mortgages across the country. Well, there's definitely a few other things that people can do. And it's just a case by case about what each person's situation or family situation is and how that makes the most sense for them based on that. So, for example, you might looking at, okay, does it make sense to take a traditional mortgage versus a reverse mortgage? If they can handle the monthly payments from a traditional mortgage and that goes through their retirement and that is within their budget, then maybe that makes sense. Or if it's good, if they're going to struggle to keep that cash flow going the way that they have planned out for their retirement, maybe there's a better product for them to do that reverse initially when they buy that next property and then downsizing. You can look at using a reverse mortgage for purchase. So
how does that work?
So an example would be you would have an amount of money that you would put down, just like you would a traditional mortgage. Okay. The difference is that the rest of it would qualify for the reverse mortgage. So, for example, if someone was purchasing something, say $700,000, and they put $350,000 down, based on the reverse mortgage qualifications, they may be able to utilize the reverse mortgage for that remaining $350,000 and not have a mortgage payment for their retirement as long as they've been living in that property. So they could leverage half of what they may have. Let's say they have $700,000 and they could pay cash, but if they do, they wouldn't have the retirement income that they need for investments and for living expenses. So you could use half of that to purchase the property, and the other half would be the reverse, and then use that reverse to make the payments so that they don't have a monthly payment. Then they have the $350,000 for their retirement and their cash flow that they can use in retirement to offset their other expenses for normal living expenses.
Like, what are the qualifications?
Yeah, so mainly it's age and equity in the property. And then, like I said, in some cases, based on what type of property, how much it's going to be, there may be some calculations on just having enough income to make sure they're going to be okay with those taxes and insurance that could be part of that property that they'll need to keep up on a monthly or yearly basis.
Okay. What are the most common misconceptions about reverse mortgages?
Thanks for your question. I do get this a lot. I think that when the first versions of the product rolled out, it was pushed out, and there wasn't as much regulation on the mortgage business in that time. And I think that, some people that got a hold of that product probably didn't fully explain it and give it all of the conditions and information out so that people understood whether or not that was the right fit for their scenario. So I think one big thing that I see is that you're giving the house to the bank, and that is definitely not the case.
Okay.
Reverse mortgage, you do, if you're taking a line of credit out, or if you're going to be eliminating a mortgage payment or eliminating a loan amount, that is going to have interest, and that is going to grow. That balance is going to grow over time, but the equity and appreciation rate of that property is also growing. So the guidelines for reverse mortgage have also gotten more conservative, so that there has to be a large amount of equity in the property for it to make sense. And it depends on age, but it's between 40 and 60% is kind of an average of what the client might need to have in order for that to make sense and for that to be a conservative option.
40%
for how much equity that they would have to be in. So let's take $1 million property and they owe $400,000 to $600,000.
Okay.
Based on age, they may be able to qualify for a reverse mortgage on that property. And that would eliminate that mortgage payment in that case if that was the goal that they wanted to achieve. And as long as they're in the property and as long as they're paying their taxes and insurance, that property can never be taken away from them. I think that was one of the big misconceptions too. It's like, some people thought that getting a reverse mortgage and you can still lose your property. Well, you can't do that. It's a government insured product. As long as you're paying your taxes, then and you qualified for that mortgage to begin with, and as long as you're living in the property, that's going to be secure. If people may have lost their property because they weren't paying their taxes, and that might have been the reason, but maybe they couldn't afford to, and they shouldn't have gone into it with that in mind. So now there's qualifications that make sure that there is some funds there for each situation to be able to pay those taxes and insurance, so that somebody doesn't have to worry about that being a potential problem. And it really allows the client more flexibility if it's a suitable situation versus a traditional.
Right.
And, like I said, I look at both options, talk to the financial advisor if they have a financial advisor too, and see which would make the most sense for them based on their overall retirement plans.
That's awesome. I love that. Thank you.